Bismillahirrahmanirrahim. Assalamu alaikum and hello to everyone. Welcome to day 5, and this is the last day of ACCA Practice to Pass webinar on paper MA Management Accounting. Today is 19 February and the webinar is being organized by ACCA Pakistan for March 2021 exams. And this is me, Haris Hanif, your tutor. And this is my WhatsApp number. First of all, I would like to ask all of you whether my voice and screen is all clear to all of you. I need response from all of you. Come on, I need response from all of you. All clear? Okay. All right. Let's now move on to the last day. And this is the last day of this Practice to Pass webinar. Yesterday, we had discussed uh, something, and we covered performance measurement. We had discussed something related to the theoretical aspects, and now I am going to discuss the costing area. The costing areas, the costing area includes absorption costing and a few examples on process costing. All right. So first of all, let's discuss what costing is. What costing is. Basically, costing is something. The word costing means estimations of cost. It means estimations of costs. It means estimation of costs for the future activity. For the future activity. Now see, activity can be anything. Activity can be production. Activity can be marketing. Activity can be services. Activity can be trading. Activity can be renovating your factory, XYZ. Any kind of activity on which cost will be incurred and you are supposed to estimate the cost, the process is known as the costing. So what is the process? What do you mean by the term costing? See, it is ing, costing. It is a process. It's a process of estimations. Estimations of cost for the future activity. It is a process of estimations of cost for the future activity. And see, when we are going to produce the product, and as I have said earlier in probably in the day 1 of this webinar, that paper MA management accounting is majorly focused on production, is majorly focused on the manufacturing aspect. And when you are going to produce, when you are engaged in the production, there are different kinds of cost. This is my per unit cost. This is my per unit cost. And that is, we have direct material cost, we have direct labor cost, we have direct expense, we have got direct expense, and the resulting figure is called the prime cost. The resulting figure is known as the prime cost. Then you will have to add variable production overheads, variable production overheads, and then the resulting figure, is the marginal. The resulting figure is the marginal or variable cost of production. Then you will be adding fixed production overheads. Fixed production overheads. Then the total amount will be full production cost. The total amount will be what? Full production cost. And these are my cost per unit. This is my cost per unit, and the process is known as the costing. Costing means that estimation of the cost for the future activity, and you are supposed to add direct material, direct labor, direct expenses, and all that stuff. Now let's have a quick recap of the differentiation between the cost, and that is something direct cost and indirect cost. That is something direct cost and something indirect cost. See, direct cost is something which is specifically being applied on the unit, which is visible. For instance, you are noting this lecture in your register in your notebook, and you are holding a pen in your hand. See the pen. See the pen right now. This is a pen. You are seeing that there is something direct. There is something material in your pen, on your pen, and the material is the plastic probably. The material is the ink. The material is the nib of the pen. These are something which is directly identifiable. You can notice that thing. That is the direct cost. Direct cost is something which is being applied, which is directly traced, which is directly traced on units. And what are indirect cost? Indirect cost is something, for example, you are producing pen and there is a rent of your factory. The rent is not being applied on that specific unit. The rent is being for the whole factory. See, any cost which is for the whole factory. Indirect cost is something which benefits for the whole factory, which benefits for the whole factory, and not traceable on the specific units. It's not traceable on the specific units. These are for the whole factory. For example, the electricity. You cannot even calculate how much one unit uses the electricity, because electricity is for the entire factory. Something which is specifically for the unit, that is known as the direct cost, and something that is for the whole factory, that is known as the indirect cost. Now, both should be related to the production. I'm not talking about the non-production thing. Both should be related to the production, and we have to include like that way, and that will be the production cost. That will be the production cost. That is the production cost. All right, students, I hope that you had noticed that thing. You had noticed that thing. Costing, it is an estimation of cost for the future activity. Costing is the for the future activity, and you had added different classification of the cost. This is known as the cost classifications. Yes, Daniel Zedi, can you hear me? Daniel, can you hear me? I was silent because I gave you time to copy this thing. Can you hear me now? Okay. Yeah, yeah. I was assuming that you people might be aware of my tutoring practice. That when I am silent, that means this is the time to copy. Okay, no problem at all. So let's move on to the next. See, in our course, there are different techniques for the costing, direct material, labor expenses, and these are the overheads. And now we are going to discuss from the examining point of view, the absorption costing. What absorption costing is? It is written here, absorption costing. It is the costing of overheads. See what is written? It is the costing of overheads. What is absorption costing? It is a costing of overheads. And what does it mean? What does it aims? Its purpose is to add means absorb. Its purpose is to add overheads in the per unit cost. Its purpose is to add overheads in the per unit cost, that is both variable and fixed cost. See the last slide. This is the last slide. You had already added variable and the fixed overheads while calculating the unit cost. While calculating the per unit cost, you had already included the variable and the fixed overheads. All right, you had included the variable and the fixed overheads while calculating the per unit cost, and that was the purpose, of the absorption costing. Now what absorption costing aims? What is absorption costing? Sir, it is the costing of overheads. Simple. It is the costing of overheads. So simple. And what is its purpose? What is its aim? Its purpose is to absorb overheads in the per unit cost, and that is both variable and the fixed overheads. All right, and that is both variable and the fixed overheads. So absorption costing aims to add overheads in the per unit cost. If you people remember that uh, absorption costing has these stages: absorbing overheads. This is the absorption costing. This is the absorption costing. Absorbing overheads has the following steps. Number one is allocation, number two, apportionment, reapportionment, and the absorption. Now, first of all, I would like to add something here, that what do you mean by the term cost center? What do you mean by the term cost center? What is cost center? What is cost center? Cost center is something, you can say cost center is any location. Cost center is any department. Cost center is any location. It is any department. It is any department. You can see that it is any department. Like you can say the production department, because production department is not responsible for raising the revenues. Production department is responsible for producing the goods, and obviously this is a production center, just like your classroom, your tuition center. This is a tuition center, and you are going to attend your classes. All right, this is online tuition center, the GoToWebinar through ACCA platform, GoToWebinar. This is a tuition center. You are having a tuition. You are having a classes. Similarly, this is a production department. It is a cost center. And what is cost center? On which costs are incurred. On which costs are incurred. On which costs are incurred. See, this is not responsible. This department is not responsible for the for raising the revenue. All right, so this is what. Now see this thing. This is cost center. This is cost center. That means department, production department. And in the cost center, cost units are produced. Cost units are produced. In the cost center, cost units are produced. All right, in the cost center, cost units are produced. Now, what I am trying to say is that, for example, imagine there is a room, there is a production room. That production room is known as the cost center. And in that production room, you are producing mobile phones. The mobile phones are the units. The mobile phone are the what? These are the units. So you can say that units are produced in the cost center. All right, units are produced in the cost center. Now let's move on. For the next slide. Now let's move on for the next slide. These are something very basics. Now, absorbing overheads. There is a process which is called allocation. There is a process which is called allocation. Allocation means, see, some overheads are departmentally specific. Some overheads are common. For instance, for example, rent. There are three cost centers in your factory. There are three rooms in your factory. Your factory is divided into three rooms only, for example, and you are paying rent. You are paying rent $500,000 for all the three cost centers. Now that rent is something which is not being specifically incurred for that particular cost center. It is for the entire factory. All right. But what allocation means? Allocation means charging. Charging, or you can say simply noting the overheads for the specific cost center. For the specific cost center. For the specific cost center. This is something allocation. Now, what do you mean by the term apportionment? See, we are not going to discuss the calculation of this thing because at paper MA level, the calculation are being examined mostly from overhead absorption rate from this area. You people might be remembering overhead absorbed, under absorbed, over absorbed, absorption and marginal costing, profit reconciliations. That is the most examinable content at paper MA level according to the based on the feedback of the many of the students which they had faced the question in the in the examination. But you should have a theoretical understanding of at least these points. Okay, so that is why the calculations are not included based on the limited time period. Okay, now what is the apportionment? Apportionment means what? Apportionment means that apportionment means that you are sharing the overheads, which is common overheads among all the cost centers. For example, there is a rent. And you are paying rent for the entire three cost centers, as I have said it earlier. So the rent will be shared. The rent will be divided into three cost centers, not on the equal basis, based on the floor area which they are occupying. So this process is known as the apportionment. What do you mean by the term apportionment? That means sharing of overheads. I should use the word common overheads. Sharing of common overheads among all the cost centers. Sharing of common overheads among all the cost centers, that is on the fair basis. I mean to say fair basis means that the cost will not be divided equally. That is according to the logical basis. For example, you can say that if there is a rent, then the rent will be shared on fair basis according to the floor area which they are occupying. Fine. Now there is a reapportionment. Now what is reapportionment? Reapportionment is something that see, there are, for example, there are two cost centers. This is production center 1, this is production center 1, this is production center 2, and this is my service center. This is my service center, like canteen, like store. For example, this is 100,000 allocated and apportioned. This is 200,000 allocated and apportioned, for example. And this is only 50,000. Now this 50,000 is a service cost center because service center is not involved in the production. Okay, they are providing services to the production center. Now this 50,000 will be shared. This 50,000 will be shared among all the cost center. This will be the balance will be nil. The balance will be nil, and these $50,000 will be shared on production center 1 and production center 2. This is the reapportionment. Reapportionment means that sharing of overheads of service centers to production centers. The webinar does not include the questions on these topics, on these areas, but we have to solve this absorption. I'm giving you 1 minute to note it down if any one of you had not noted that. Note it please. Then we will be starting the absorption, which is the pure examining perspective at MA level. Students, that you people had noted that thing. And now what are the stages? I'm again repeating. That is the allocation, apportion, reapportion, and that is the absorption. Now absorption means adding. Adding means absorbing. Adding absorbing overheads in per unit cost. In per unit cost. The term absorption means adding overheads in the per unit cost. Adding overheads in the per unit cost. All right. Now, this is the stage which we are going to discuss in the next slide. That is overhead absorption rate. Now, overhead absorption rate is basically number fourth step, that is absorption. This is number fourth step, that is absorption. Okay, now listen it very carefully. Listen it very carefully. This is overhead absorption rate. The above is the abbreviation, overhead absorption rate. And this is my budgeted overheads and budgeted activity level. This is my budgeted overheads. Now, what are these budgeted overheads? These are something allocated plus apportioned plus reapportioned. These are all allocated, apportion, and reapportion. These are budgeted overheads and these are budgeted activity level. If you people remember from the day one of the webinar, no, on the day two of the webinar, in which we had discussed fixed overheads, expenditure, and volume variances, I had already taught about this overhead absorption rate. Now, for example, overhead absorption rate, the activity level, usually the time. The activity level may be number of units. It may be number of units produced, or usually or mostly it is time, because based on the time the overheads are being incurred, and the time is higher of either labor hours or the machine hours, because overheads is a volume based costing, and it see the volume of the activity. So for example the budgeted overheads are, let's say 875,000. It is 875,000, and that budgeted labor hours, for example, for example, it is budgeted labor hours, and these are 500 hours, and this is budgeted machine hours, which is 100,000. Okay, now see, your production depends on labor hours and machine hours both. Your production depends on machine and labor hours both, but in this specific example your production is being heavily dependent on the labor hours. So you will be terming this thing as the production is labor intensive. The production is what? Labor intensive. Your production is labor intensive. Labor intensive, that means heavily depends on labor. So you will be dividing your overheads, that is $875,000 divided by 500,000. 875 divided by 500, that is $1.75. 1.75, this is per hour. 1.75 per hour, and you will be saying that this is the estimated rate. Okay, this is not something actual, this is something estimated, which you are going to estimate at the start of the period, at the start of the month, at the start of the quarter, or whatever is your time period. So what is overhead absorption rate? What is overhead absorption rate? You will be saying that when labor will work 1 hour, comma, estimated overheads $1.75. 1.75. When this particular overheads will be incurred, sorry, when the labor will work 1 hour, when the labor will work 1 hour, the estimated overheads are likely to be 1.75, and these are all my estimations. See, I'm highlighting it with star. These are all estimated figures. When labor will work 1 hour, the estimated overheads are $1.75. This is overheads absorption rate. Rate is something which is on per unit. For every hour there is 1.75 overheads. For every hour there is 1.75 overheads. For every hour there is 1.75 overheads. Okay. So let's now move on to the question. Let's now move on to the question after just 20 seconds. Okay, let's now move on to the question. Let's now move on to the question. First of all, we should read the requirement, which is at the last of the question. What is the overheads to be added in the per unit cost? What is the overheads to be added in the per unit cost? What is the overheads which should be added in the per unit cost? First of all, read the question at your own pace. Okay, let's now read the question, students. This is a very simple example. This is a very simple question, and the question is that budgeted overheads amounted 150,000. Budgeted overheads amounted 150,000, and budgeted labor hours 60,000 and machine hours 20,000. Obviously, we will not be including this thing because we take the volume of activity, volume of activity which is higher volume of activity. All right, then it is saying to make 1 unit product alpha, it needs 5 labor hours and 2 machine hours. What amount of overheads to be included in the per unit cost? Obviously, you will be calculating overhead absorption rate, that is $150,000 divided by 60,000 hours, 150 upon 60,000 hours, and that is $2.5. What is this 2.5? This is something per hour. This is overhead which is on per hour. That means when labor will work 1 hour, when labor will work 1 hour, it is estimated that overheads will be $2.5. And C, to make 1 unit, and C, to make 1 unit, it requires 5 direct labor hours. Okay, it needs 5 direct labor hours. So for every hour, for every 1 hour of labor working, you have attached the overheads to the you have attached the overheads, you have connected the overheads with the labor time, and that means that 1 hour 2.5 overheads, 2 hour 2.5 overheads, 3 hour 4 hour 5 hours, and the product which you are holding in your hand, that is the pen, for example, that is being made in 5 labor hours. So overheads per unit, this is $2.5 multiplied by 5 hours. So 2.5 multiplied by 5 would become $12.5. So $12.5 is my answer. This is my answer. And what was the per unit cost? Whatever the direct material cost, whatever the direct labor cost, whatever the direct expense cost, whatever the cost it is, but overheads amounted $12.5. So now that will be the total cost. Now that is the mechanism of calculating the overheads. That is the mechanism of calculating the overheads on per unit. Now, the very important thing which I'm going to discuss after 10 seconds, just because it is not something complex to note it down. Hurry up. I'm just giving you people 10 seconds. Okay, let's now move on to the next slide. And the next slide is uh, overhead absorbed, actual overheads over under absorbs. Okay, now what is overhead absorb? See, now this is something which is frequently examined, at MA level, in the section A kind of, questions. All right. Now, what is overheads absorbed? Overheads absorbed. Listen it very carefully. Overheads absorbs is something which is at the start of the period. It is something at the start of the period, something at the start of the period. Now, what does it mean? What does it mean? That means while you were estimating the cost, while you were, see, the estimations are always at the start of the period. This is a very common thing. You had estimated that at the start of the period, you had estimated that your overheads amounted 10 per unit, 20 per unit, or whatever. This is something overheads which you had estimated at the start of the period. And it is charged in COGS. And it is charged in COGS. All right. Now, what is actual overheads? See, what is actual overheads? Actual overheads is something which will be actual overheads is something which will be which will be which will be the which will be noticed, or you can say which will be reported at the end of period. It is at the end of the period, and obviously there is a difference. There's a difference in your estimation and the real overheads. The overheads cannot be similar. The overheads cannot be same that you had estimated and what was in an actual. Okay, so there is something over absorbed, and this is something under absorbed. Under absorbed and over absorbed. Over absorbed means that when estimated overheads are higher, when estimated overheads are higher and actual is low, and actual overheads is low. Your estimated overheads are higher and actual overhead is low. And we will be further understanding this with with examples, with the questions in the next slides. And this is vice versa. When your estimated overheads low and actual overheads high, and actual overheads are higher, that means you had charged less. You had charged less at the start of the period. It is a difference of this thing. It's a difference of start and the end. This is the thing. Okay, now see this thing. Hurry up. Note this statement in quickly. When estimated overheads are higher and actual overhead is low, and under absorb means estimated overheads are low and actual overheads are higher. Hurry up, quickly note it down. Now let's move on to the question. This is a question. Calculate over or under absorbed overheads. Hurry up. I am reading the question. You just focus on my words and your screen as well. The company had estimated the overheads. The company had estimated the overheads amounted, it is 7 per unit. And it actually produced 2500 units and actual overheads were 16,000. Now, what do you mean by the term overheads absorbed? Overhead absorbed. See, Overhead absorbed, that means absorbed at the start of the period. Absorbed at start. It is on actual units. It is on actual units. For example, at the start of the period, you had estimated this rate. This is the estimated rate. This is the estimated rate, and it is your plan. It is your plan to produce. Sorry, you had actually produced 2,500 units. You had actually produced 2,500 units. That means your overheads absorbed. Your overheads absorbed are. Your overheads absorbed are. This is OAR multiplied by actual production. This will always be the actual production. Now, what is overhead absorption rate? 7 multiplied by 2,500. What does it mean? That means now this is the time when I had not received the actual overheads. 7 multiplied by 2500 results in $17,500. Now that was already charged in the COGS. That was charged in COGS, and this is something which is estimated. This is something what which is estimated. Now when the period ends, actual overheads resulted. Actual overheads resulted $16,000. So what was the amount which you had already charged in the COGS? What was the amount which you had already charged in COGS? See, it is written charge in COGS. That is $16,000. Sorry, $17,500. $17,500 is the amount which you had charged in the COGS based on your estimations. But when actual results came, it is 16,000. See, estimated higher and actual lower. That means you had already charged higher in COGS. That means you had already charged higher in COGS. The amount is 1500, and that is the over absorbed. That is what? Over absorbed. Wait a minute. That is the over absorbed. Now what does it mean, over absorbed? Over absorbed is something, that you had charged more in the COGS. You had charged more in the COGS based on your estimations. Now answer me, students, what shall I do? What shall I do for this 1500? Shall I deduct it from COGS or not? Just answer me. There is already the large balance in COGS. Shall I need to deduct it from COGS? Say yes or no only. Yes, because in the overheads there is a, because in the overheads, sorry, in the COGS there was a large balance of 1500. Now see this thing very carefully. This 1500, this will now be deducted from COGS. This is now deducted from COGS at end of the period. So when cost will be low, resulting in profit to be high, that means over absorbed will increase your profit. Over absorbed will increase your profit. And profit, when the profit is increased, it is recorded on the credit side. So the entry would become income statement credit 1500 and overheads account debit 1500. This is the entry to record over absorbed overheads. So over absorbed overheads. Now the question usually asks, what is the double entry? How will you account for the over absorbed? Sir, over absorbed will be the result of estimations higher and low actual overheads cost, and then you are supposed to adjust it. When you will deduct it from COGS, naturally your cost will be low and your profit will be high, and this is the entry to record over absorbed overheads. All right, because the profit is, when the profit increases, you record on the credit side. So overhead account debit and income statement credit, that is the double entry to record overhead over absorbed. All right, this is a very important thing, over absorbed overheads. I am just waiting for exactly 20 seconds for you people to copy, if anything you left. Five seconds to go. Now, this was something which is over absorbed overheads. Now let's move on to the next slide. And the next slide is saying calculate over under absorbed overheads. All right, over under absorbed overheads. So let's now start reading the question. The company had estimated the overheads amounted $4 per hour, and the actual hours 3900 and actual overheads 16,700. Now see, there is no units. Now the overheads are being absorbed on labor hours because we do not have units. So how will you be accounting for which is overheads absorbed. What is the rate? The rate is 4 per hour. Multiply. What is the actual hours? 3900. 3900 hours is your actual. So what was the amount of the overhead absorbed? That is 15,600. And you had noticed the actual overheads. You had noticed the actual overheads, that was 16,700. Now see, you had estimated uh, this is something charged in COGS at start, and this is resulting at end. Now in COGS you had charged less. There is a less balance in COGS as compared with the actual. So this is known as the under absorbed overheads. This is known as under absorbed overheads. 15,600 minus 16,700. It is 1100 negative under absorbed. So what should be done with the under absorbed? So we should, because in COGS there is a low balance written at the start of the period, and now we are making the adjustment at the end. So we should now add $1100 in the COGS as an adjustment. So as a result, my cost would increase and my profit will decrease. So the double entry to record this under absorbed overheads, because the profit, when the profit is reduced, that means loss, and the entry would be income statement debit by 1100 and overheads account credit by 1100. Overheads account credit by 1100. Now that is the double entry as well, which I had already written here. Just note it down. In what is the double entry to record under absorbed overheads? Income statement debit, overheads account credit. And what is the entry to record over absorbed overheads? That was written in the last slide. Okay, now let's move on to the next slide. This is absorption costing and marginal costing. And absorption and marginal costing. See, what is absorption costing? What is marginal costing? I'm now going to differentiate it. First of all, just note the key points of the absorption costing. Okay, what is absorption costing? Absorption costing, in absorption costing, the per unit cost includes all the production cost, all the production cost. That is direct material, direct labor, direct expense, variable overheads, as well as fixed overheads. For example, I'm writing random figures. I'm writing random figures, that is $10, $10, $10, and $5. For example, this is $35 per unit. This is according to the absorption costing. But according to the marginal costing, the per unit cost, is the variable cost. Is the variable cost. Is a variable cost. Now, what marginal costing is assuming, I will be writing something in the next slide. So here it is only the variable cost, direct material, direct labor, direct expense, and the variable overheads. This is 10. This is 10. Okay. I ignore direct expense. Forget direct expense. Here also ignore the direct expense because of the calculation. Okay, it is there's a variable overheads. It is $10. So it would become $30 per unit. Now see, there is a difference of the difference the difference is due to fixed overheads. Now, why there is a fixed overhead difference? I'm going to explain it in the next slide. Because marginal costing is saying that for every at one additional unit, for every one additional unit, there is additional variable cost, and fixed cost is same regardless of the production. And fixed cost is same regardless of the production. I'm writing here something that fixed cost is same regardless of the production. And marginal costing is not that is the main reason, that is something written in the box, that is the main reason that marginal costing is not adding the fixed overheads in the per unit cost. Marginal costing is saying that whatever the per unit cost and whatever the number of the production, the fixed cost will be the same for the particular period. No need to charge in the per unit cost, because when you will produce something, it will be partially sold and some units will be remaining in the closing stock, and that will be transferred in the next month. So the fixed cost will also be transferring in the next month. Now see the technicality of this. See the technicality of this. Points to remember. Points to remember. This is a very important slide. This is a very important slide. For example, you had produced 1,000 units. You had produced how many units? 1,000 units. And you had sold 800 units. And in closing, you are having 200 units. All right. You are having this 200 units. I'm taking the I'm taking these figures. Okay. I'm taking these figures. In absorption costing, the stock is 35. In marginal costing, the stock is at $30. Now see, in absorption costing and in costing, marginal costing, in absorption costing, the fixed overheads are $5. In marginal costing, the fixed overheads are $0. See the last example. Now what will be happening if I will be using absorption costing? If I will be using absorption costing in this example, I will be writing some points over here, theoretical points. But if I will be using absorption, then fixed overheads will be on 800 units, because 800 units will be the cost of goods sold, and the fixed overheads will be transferred in next month of 200 units. But marginal costing is saying that no need to charge fixed overheads in the unit cost. But marginal costing is saying that in per unit, no fixed cost, zero. Treat the whole cost, in the current period. No transfer to the next period. No transfer to the next period. Okay. But in absorption costing, it is included in this per unit cost. Now this is month number 1, This is and this is the month number 1 in which I had sold 800 units, and naturally the fixed cost is the part of the production cost. Marginal costing is not making the part of the production cost. Marginal costing is saying treat is a monthly cost, the entire cost, no need to transfer to the next period. So what are the key points to remember is that I am going to write with blue color. Just note it down. Key points to remember is that absorption costing makes fixed cost as the part of the production, as a part of the production, as a part of the production. The fixed cost on closing units will be transferred to next period, will be transferred to next period. Marginal costing does not include fixed cost in the marginal costing does not include fixed cost in the unit cost. Marginal costing does not include the fixed cost in the unit cost. It treats the whole fixed cost as the periodic cost. Periodic cost means the entire cost to be charged in the particular period, no transfer to the next period, no transferring to the next period. The entire cost should be included in the periodic cost. Now marginal costing is saying whatever the cost is incurred regardless of the production, you should make it the part of the period cost. Okay. Mr. Wakar, I am addressing your question that Mushid Siddiqui, the slides will be shared in the WhatsApp group. Don't you worry about the slide. I will be sharing that thing. And Wakar, your question was that why non-manufacturing overheads are is variable non-manufacturing. It is not something manufacturing. Non-manufacturing is something which is not related to the production. We are talking about the production. It is not added in the per unit cost in the marginal costing. Now, students, I am now going to for the next slide. I am now going for the next slide within just few seconds. And this is my next slide. Now there is a profit difference under absorption and marginal costing. Obviously, there is a difference under absorption and marginal costing. The profit is because of fixed cost and the number of units. I am now going to write a very simple trick because at the last moment when you are going to prepare for the exam, just remember this trick and you will be able to calculate the you will be able to calculate all the questions of this absorption and marginal profit reconciliations. Okay, just remember this formula, and there is something fixed overheads and number of units. Now you should have fixed OAR per unit is equal to marginal profit minus absorption profit divided by opening stock minus closing stock. Okay, you will be able to calculate the marginal and absorption costing. And remember one thing, point to note is that opening and closing stock. When stock increases, when stock level increases, profit from absorption increases. Okay, Number two is that when stock level decreases, profit from marginal increases. Now, this is the thing to note. This can be asked in a theoretical statement. Hurry up, note it or capture it. I am waiting just for 20 seconds. Note or capture whatever you want, just 20 seconds from now. All right. Now let's move on to the question. Calculate the profit under marginal costing. Now, focus that I am reading. Just focus on the question as well. Orange Limited is operating absorption costing and its reported profit under current system amounted 80,900. 80,900 is the profit from absorption costing, and we are required to calculate profit under marginal. Okay, fixed OR 1.5 per labor hour, and it needs 3 labor hours. Now, first of all, we need to have overhead absorption rate per unit. It's 1.5. Hurry up, students, solve the question simultaneously along with me. Because of shortage of time, uh, it's not possible to give you more time. 1.5 multiplied by 3, that is $4.5 per unit. Okay, now see, opening, production and sold. You had opening stock 200, you had produced 1600, that means you are total having 1800, and you had sold 1450. That means your closing stock is 200 plus 1600 is 1800 minus 1450 which you had sold, and the remaining is 350 units. Now see, this is the opening and this is the closing. You should say that stock level is increasing. Stock level is increasing by, your stock level is increasing by 150 units. So my answer would be absorption profit high, absorption profit high, and marginal profit is low. Now apply that trick. The last formula, this is the formula. I'm not going to redraft the formula. I'm just now going to put up the figures. Now that is overhead absorption rate, which is 4.5, is equal to marginal costing profit is unknown to me, x, minus absorption costing is 80,900, opening stock 200 minus closing stock 350. Now use your mathematical tricks, but I know one thing, my answer will be lower than 80,900 because absorption profit should be higher. So this is now 4.5 is equal to x minus 80,900, and this is something minus 150. When it will go over there, that will become minus 675 is equal to x minus 80,900. Now x will go over there. 675 plus 80,900 is equal to x. Now my answer is 80,225 is equal to x, that is the marginal profit. Apply this trick in your questions, either in your regular class worksheets or in your official exam kits. I'm damn sure that you people will be able to now solve this profit reconciliation. If it is given marginal costing, you can calculate absorption and vice versa. Just waiting for 15 seconds. Capture it. Now, this is the next slide I am going to, the profit under absorption costing. The profit under absorption costing. Now, see, fixed overheads is 6 per unit. It is per unit, no need to calculate that. just calculate the opening. How many units opening? 100. How many units produced? 1100. That means how many units you are having? You are having 1200. And how many units you had sold? 1120. 1120 you had sold. Now we have 80 units in the closing. Now this is opening, this is closing, and your stock level is decreasing. Your stock level is decreasing by 20. Okay, so that means marginal profit should be higher than the absorption. So this is the profit under marginal costing, 99,900, and we are required to calculate from absorption. Now I'm simply placing the figures in the formula. $6 per unit, and that is marginal costing profit minus X. Absorption is unknown. Opening 100 minus closing 80. So that will be 6 is equal to 99,900 minus X upon 20. It will go over there. That is $120 is equal to 99,900 minus X. Now it's 120 minus 99,900 is equal to minus X. That is minus 99,780 is equal to minus X. Minus minus will be cancelled, and that means your X, which is your absorption. Absorption profit is $99,780. All right. So see, the marginal costing profit is higher now. The marginal profit, because the stock level is decreasing, so marginal profit is higher, and this is the marginal profit higher and absorption profit lower. Okay, let's now move on for the process costing. Now, what is process costing? It involves the costing of series of processes. Series of processes. Now, you people might have studied that there are series of different processes. Now, what? For example, petroleum. For example, I should write it completely. For example, there is a oil refinery. There is a oil refinery. Okay. Now, there may be a chemical industry. Chemical industry. Now, what is the process costing here? That your product is made using different series of processes. That is, for example, P1, then process 2, then, for example, process 3. The resulting are the finished goods. The resulting are the what? Finished goods. This is your process costing, the serial of steps. And what is the basic purpose of process costing? To have cost record for every process. That what is the cost at here, what is the cost here, what is the cost here. We should have the record for each and every process, because we are doing the costing for every process. So that is the process costing. Now, one thing, there is a closing WIP and equivalent units concept. Closing WIP and equivalent units concept. This is a very important concept. Why I have chosen this concept? Because of the regular examining content at MA level. Okay, you people may be receiving 2-3 questions on process costing based on the past experience of the students and based on the feedbacks. So you may be receiving the process costing calculation, which involves work in progress and equivalent units. Now, assuming no loss, assuming what? No loss. There may be loss, but there is no loss in our course. It is written in your official textbooks that there is no loss in the work in progress and equivalent units. Assume, imagine that this is my process 1, this is my process 1, and I had inserted my resources for 1000 units. I had inserted my resources for 1000 units, out of which 700 units are 100% finished. 700 units are 100% finished, and 300 units are still in WIP, that the work is not completed yet, they are in progress. You people might be noticing or observing in your streets, roads, whenever the construction is going on, it is written the work is in progress. That means the complete road is not made. You can say this is the meters, this is the roads, 1000-meter roads we have selected to repair, and 700 meters of the road had been completed, and on 300 meters the work is still in progress. And when I asked to that person that what is the status, they had told me that, sir, it is 80% done. It is 80% done, and 20% will be done in the next month, in the next process, for example. So see, equivalent units are the units, these are the units that shows the partial work, partial incomplete work, or you can say the work which is completed to date. Now see how many units you had already produced. 100%, that is finished goods 700, finished goods 700, and 700 goods are still in progress, but that are 80% done. So 300 multiplied by 80%, that is 240. 700 plus 240, that is 940. This is known as equivalent units. Students, just copy it down. This is the equivalent units. Just note it down. Hurry up. These are equivalent units. You are supposed to note it down. I'm giving you few seconds for that. Okay, I am now assuming that you people had noted it down. Now let's move on to the next slide. Now let's move on to the next slide. And this is the steps of process costing. These are the steps of process costing. This is equivalent units first of all. Number two, you need to calculate cost per equivalent unit. Number three, valuations, and number four, the process T account. Number four is the process T account. Number one is the equivalent units. Number two, cost per equivalent units. Number three, valuations, and number four, the process T account. Okay, so remember these steps. Now this is the question. This is the question, and I'm going to read it. The question is saying that complete the process T account. Complete the process T account. Complete the process account. Complete the process account. Process Limited had input 2000 liters. Process Limited had input 2000 liters in a process to produce the product gamma. Closing WIP is 300 units, which are 80% complete. The whole process cost, now the whole process cost includes direct material, direct labor, production overheads, and all the costs amounted 10670 for the period. 10670 for the period. Now we have to follow all these four steps. We have to follow all these four steps. Number one is calculate equivalent units. Number one, we have to calculate the equivalent units. Number one, equivalent units. And that is, what is the finished goods? What are the finished goods? That is, see, 2000 liters are input and 300 are in WIP. That means for sure 1700s are the finished goods. Okay, so it is 1700 plus closing WIP, that is 300 multiplied by 80%. 8 3s are 24, that's 240, and 1700 plus 240 would become 1940. That is your equivalent units. Okay, now next, number two. Number two, we need to have a cost per unit. We need to have cost per unit. 10670 upon 1940. 10670 upon 1940, that is $5.5 per unit. That is cost per unit. Okay. Number three, we have to calculate for the valuations. And number four, the process account. Now the valuation will be of the finished goods and WIP. What is the finished goods value? 1700 multiplied by 5.5. 1700 multiplied by 5.5, that is 9350, and WIP, that is 240. WIP, that is 240. 240 is the WIP. 240 multiplied by 5.5, that is 1320. Okay, so you will now have to prepare the process T account. This is my process ledger. This is my process ledger, and here I will be writing dollars and here units. Dollar and units. Now this is input, input, that is 2000, and you have to insert the cost as well. Okay, I think I should redraft it for better visibility with different colors. This is my T account. Okay, and here it is dollars, here it is units, here again units and dollars. So input is 2000 and the cost is 10670. Here it is FG, finished goods, 1700, and that is the value is 9350. But remember one thing, how many units are in closing WIP? That is not 240. In closing WIP there are 300 units. I will be writing here closing WIP 300 units, and the value will be 1320, and the value will be 1320. Now your process T account would be balanced. You people can check it. This is a process T account. This is a process T account, and your process account is now balanced. And in the closing WIP, you will be writing the entire 300 units. You will be writing the entire 300 units, but the value will be of 240 units. Now let's move on to the next slide, and it is different stages of closing WIP. Now, what are different stages? First of all, see, this is written conversion cost. I should first explain the conversion cost. Conversion cost is something that your material is converted into finished goods. Material is converted into finished goods. Now, which resource is being converted into the finished goods? The material. Now, when the material cost will be converted, when you will be charging direct labor plus production overheads. So this is the conversion cost. Conversion cost is equal to direct labor plus production overheads. Okay, so conversion cost, that is 5280, which is written here, that includes direct labor as well as the production overheads. Now let's start understanding this example. Sorry, it is the answer will be split into two slides. Okay, so first of all, number one, we need to prepare the statement of equivalent unit. The statement of equivalent units. The statement of equivalent units. See what is written here. Input in the process 1000 units, finished goods 800. Closing WIP, with respect to the material is 90% done, and conversion cost is 80% done. Now the percentage is something that on the closing inventory, first of all, note it down that with respect to material, with respect to material, with respect to material, the finished goods are, see, 1000 units, that means 800 is done and 200 are on WIP. That is, finished goods are 800 units, which is done, and closing WIP with respect to the material 200 is 90% done. That is, material is being allotted to the closing WIP, that is 90%. 200 multiplied by 90%, that is 180. So that means this is the equivalent units for 980. Equivalent units 980 with respect to the material. Now with respect to the conversion cost, finished goods are same 800, but closing WIP is 80% done. So 200 multiplied by 80%, 8 2s are 16, that would become 960. All right. Now this is the equivalent units with respect to the conversion cost. Now what you are supposed to do right now in your step number 2, I am writing step number 2 here. I am writing step number 2 here. This was my step number 1. Step number 1. Now step number 2 is here. We need to calculate cost per unit. Now we have got two different equivalent units. We have got different amounts and we will need to calculate different cost per unit. That is with respect to material 2940 upon 980, with respect to conversion cost 5280 upon 960. That was $3 per unit, and that is 5280 upon, this is 5.5 per unit. Okay, just note it down. Then I will be using these figures in the next slide because there is no space available here. I will be proceeding this question in the next slide. Now, in the third step, it is very much important. The third step is of the valuations. Now, see, valuations for finished goods, total value per unit. Total value per unit. That is what? 3 and 5.5. That is $3 plus $5.5. That is $8.5 per unit. Okay. Now for the closing WIP, calculate separate WIP, and that total WIP will be reported in the process account. Now this will be my fourth step, process account. But first of all, apply these things here. Look at here with the blue color. This thing and this thing. Okay. How many units are finished? Sir, 800. Now finished goods are 800 multiplied by 8.5. Finished goods are 800. That is 8.5. Yes, it was 800 multiplied by 8.5. The answer is 6800. And number 2 is the closing WIP. With respect to material, with respect to labor, with respect to the conversion cost. With respect to material, see that thing, 180 and 30 and 3 per unit, 160 and 5.5. 180 multiplied by 3. 180 multiplied by 3, that is 540. And with respect to the conversion cost, 160 multiplied by 5.5. 160 multiplied by 5.5. 160 multiplied by 5.5, that is $880. Now these two things will be reported in the process account. This is 1420. Okay. Now see how the process T account will be shown. That is, input was 1000 units. Input was 1000 units. 2940 and 5280 are the input cost, direct material and conversion cost. That was 2940 and 5280. You can make it total, it will be balanced. And what is the value of finished goods? That is 800 at 6800, and WIP closing 200, that value 1420. Your answer would be balanced. You can check it out. These figures will be balanced. Hassan Gauri, that FIFO and FCO which you had asked, it is not under uh, uh, closing WIP. It is in the opening WIP. It is for the opening WIP. Okay, now students, now I'm going for the next slide. And the next slide is about the forecasting and the data techniques and the data analysis techniques. Okay, so this is the data analysis. Now put up the heading of the data analysis. What do you mean by the term data analysis? Analyzing means analysis of the past. Analysis of the past. Data analysis means analyze of the past data. Analyze of the past data. Now it can be any data. It can be any data, whether it is financial, whether it is non-financial, whether it is financial or whether it is non-financial. Analysis of the past data. Financial and the non-financial. Okay. Financial is something like you can say it is in the monetary figures, and non-financial is something, you know what non-financial, we had already discussed the qualitative aspect, the number of complaints and all that stuff. Now there is a recently added topic which is the big data in your syllabus. Big data. What is big data? Look, big data is something. Big data is something. Big data is something which has following three basic V's. Following three basic V's. Now you might be confusing what is three V's. That means number one. Number one is the volume. Number one is the volume. Number two is the variety. And number three is the velocity. Number three is the velocity. Now what is volume? Volume is something that refers the quantity of the data. That refers the quantity of the data. I am giving you live examples, the real life examples, and you people are already aware of those organizations. You people are already aware of those organizations. Do you people use Facebook? Obviously, yes. 99% of the student would be using Facebook. You might have seen the advertisement of this practice to pass webinar on the Facebook. You people are using Google. You people are using different kind of search engines, the Instagram. These all are the organizations having the big data. Because of the quantity of the data, people from Pakistan, from UK, from UAE, from India, Bangladesh, USA, there are so many different countries, and all you're using that one particular platform, and that organizations are having the data at large quantity, at bulk of the quantity. Now, uh, next example, Emirates Airline, Pegasus Airline, Turkish Airline, Etihad Airline, PIA, Pakistan International Airline. There are so many passengers who had traveled in the past, and that airline company has the data of many of the passengers, both locally and internationally. This is what volume. Now, when it comes to the social media, on the internet, the volume of data is measured through megabyte, through gigabyte, through petabyte, through exabyte, through yottabyte. Yes, you people are not aware of the yottabyte, exabyte, and all. When 1024 MB, it becomes 1 GB, 1 gigabyte. When 1024 GB, it calls 1 TB, 1 terabyte. When 1024 TB is called 1 petabyte, then exabyte, yottabyte, zettabyte. There are a lot of bytes. And obviously, at home, at the personal capacity, we have hardly the data in terms of gigabytes, GB, 30 GB, 20 GB hard drive, etc. Now, what is the basically the volume? Volume is something that is refers the bulk quantity of data. That is the quantity of data. That is the quantity of data. Now, what is the variety? Variety is something that you have got different varieties. Now, how we will be differentiating different varieties? Different varieties like financial, like non-financial, like pictures, videos, texts, like your phone numbers, like your NIC National Identity Card number, like your blood group, your passport number. Imagine there is a hospital, there is a very big hospital in your area. It's a very big hospital, and there are a lot of patients, and the hospital is near about 20 years old hospital, and they've got different kinds of data. uh, just see the one example. There's a Facebook. In the Facebook, you are having pictures. People upload the pictures. There are videos. There are text. Feeling happy with 29 others, and people use their telephone number, blood group in the hospital. Depending on the nature of the organization, they are storing their data. And there is a velocity. What is the velocity? Velocity is something that is speed of speed creating and updating the data. Speed of creating and updating the data. Speed. I am giving you one simple example to understand the velocity. That is it is it is the past data which I had searched it from the Google, that there are 500 tweets in a Twitter. There are 500 tweets in one day. You might be confusing. 500? No, it is 500 million tweets in one day. Everybody nowadays are using Twitter, but I am not. But I don't use it. Me, Haris Hanif. There are a lot of people using Twitter. 500 million tweets in one day. across the world approximately. It is not the confirmation. And this was the approximately last year analysis, which I'm going to which I'm explaining here. Obviously, in today 2021, this figure might have exceeded 580 million tweets per day, and this is what the speed of creating and updating the data. Now, this is these when these V's are at least these three basic V's are met, the data is known as the big data: volume, variety, and the velocity. Volume, variety, and the velocity. And nowadays, every organization has got some kind of a big data. But when you compare one organization with another organization, the big and the small data can be differentiated based on the volume, variety, and the velocity. Okay. For example, the data of the students, ACCA organization. Uh, uh, ACCA is the leading, one of the leading organization across the world in the accountancy profession, which is operating in more than 190 countries. And see, there are a lot of data of the students from 190 countries, hundred thousand and lakhs of. There are many ACCA members, many ACCA students, many affiliates. ACCA has got volume of data. The variety according to the ACCA point of view, that how many students have have completed their ACCA journey, how many students are taking the webinar, how many students have passed their skills module, whatever. There's a variety of that data: their telephone number, their birth, their date of birth, their passport number, their number of attempts they had attempted the paper, the velocity, the speed. Obviously, the speed of ACCA students is increasing. It was a very past analysis that after every 8 minutes or after every 8 hours, I forgot that rate, one student enrolls in ACCA. Now it is the fasting thing. ACCA is the leading organization. Many of the students are entering into the accountancy qualification and pursuing ACCA. Now that is the speed. That's the speed of the data. Now, one thing point to be noted is that there is one other V. This is veracity, and veracity is the reliable source of data. The data should come from the reliable source. Okay. So data analysis, that means you are supposed to analyze your past data, both financial and the non-financial. The big data, which I had explained, volume, variety, velocity, this is another veracity. That's the reliable source of data. Now, how big data is used and why? How big data is used and why? How big data is used and why? The answer is, how will you use your big data? How will you use your big data? And why do you use your big data? Why? Why you are using the big data? Why you are using the big data? Why you are using the big data? So as a organization, for example, I am running an airline business. We have got airline business. We are airline business, and we have got traveling pattern of the passengers. We have got the traveling pattern of the passengers, so that we are so that we can quote the ticket price. Now see, after 2-3 months, the tourism season will be at its peak if COVID-19 allows. Now, airline business will analyze the past pattern. Now, how and why big data are used? For research and development, for production processes, improvements. Why I'm using the big data? Okay, how will you use the big data? Through data analysis, through different techniques. And why will you be using the big data? For research and development, production process improvement, to understand the pattern, to understand the past pattern, and quoting selling price for future, to understand the customer needs, and simply for planning, controlling and the decision making. Planning, controlling and the decision making. This is why you are using the big data. Why you are using the big data? Big data, okay, it depends on the nature of the organization which you are operating. Okay, observe the last year 2020, the covid-19 the covid-19 situation. Many, approximately all the businesses were shifted to the online, and then now the online platforms like GoToWebinar and other online platforms have now got the variety, the volume and the velocity of the data, and they are now using the data to predict the future pattern, that how and why the people will be switching towards the online meetings, so that they can schedule their servers. Okay, so that was the big data analysis. Now there is another thing, which is the coefficient of correlation. Now students, please focus here. Coefficient of correlation. Coefficient of correlation. See, coefficient of correlation. Coefficient of correlation, this is a forecasting technique, and coefficient of correlation basically, coefficient of correlation basically, it measures, it measures the relation, it measures the relationship between two variables. It measures the relationship between two variables. One variable is x and one is y. One variable is x and one is y. What is x? X is something which is independent, and y is something which depends on x, which depends on x. For example, x is my summer season. When the summer season, when the weather will be hot, then in response, then in response, y is ice cream sales. Obviously, when the weather will be hot, then the ice cream sales will be increasing, na? So x is the independent variable, y depends on the x. Now, in order to understand the intensity of the relationship between these two variables, there is a measurement which is known as the coefficient of correlation. And now I am going to write the formula of coefficient of correlation. It is shown by a small r. Hurry up, students. Uh, this is n, and this is summation of xy minus summation of x summation of y upon under root n multiplied by summation of x square minus summation of x whole square, the bracket is closed, and then n multiplied by summation of y square minus summation of y the whole square. Now this is something I advise all of you people to memorize the formula, but it will be available in the exam. So what is the coefficient of correlation? If your answer, if your answer is, if your answer is, if your answer is, your answer should be, your answer should be between these range -1, 0 and +1. If your answer, if your answer is in this range, if your answer is in this range, that is negative correlation. If your answer is in this range, that is positive correlation. Now, what do you mean by the term positive and the negative correlation? Positive correlation means Positive correlation means if x increase, y increase. Negative correlation means x increase, y decreases. For example, the weather season is hot. The weather is hot. Ice cream sale will be increasing, but the demand for the jackets and the sweaters will be declining. So there is the inverse. You can say positive and negative means direct relation, and this is inverse relation. This is direct and inverse. Okay, this is direct and inverse. I hope you people have noted this formula, or I advise you just to capture it, because uh, right now, right now I will be solving the question in a quick manner. Because of the mathematical calculation, you people can even apply these calculations. But I need to explain you people the tricks. I need to explain you people the tricks. Okay. So next slide. Here, see the question. See the question, and I will be writing the solution here. This is my month number 1. Okay, I should explain what does n indicates. N indicates number of pairs of data. What is this n? N means number of pairs of data. Number of pairs of data. Okay, this is my pair number 1, pair number 2, pair number 3, pair number 4. That means n is 4. See, what is the x here? This is x and this is y. Temperature degrees and ice cream units. Now I have to draw. Now I have to draw the columns. I have to draw the columns. N is 4. I have to draw the columns. First of all, x, then y, then xy, then x square, then y square. Okay. 1, 2, 3, 4. Hurry up, students. Just I'm writing just x. X is 10, 18, 20, and 28. Now this is known as summation of x. 10, 18, 20, and 28. This is 76. Now what is y? Y is 29, 36, 40, and 48. What is summation of y? 153. Now what is xy? You have to multiply x and y individually. 20. It is now 290. I am writing the correct figures. I advise all of you just to capture or note it down in a quick manner, because I will be a little bit fast, because the concept has been clear and the calculation is necessary to show. 290, it is 648, it is 800, and it is 1344. Now this is known as summation of xy. Now the total figure is 290, 648, 800, and 1344. That is 3082, and you have to take x square and y square. What is x square? 100 square. 10 square will become 100. 18 square will become 324. 20 square and 28 square. That's 400, 784. And this is known as summation of x square. 1608. And then take the y square figure. Okay, take the y square figure. 841, 1296, 1600, and 2304. And the amount is summation of y square, that is 6041. Now these are the figures which we had calculated using x and y, using the calculations of x and y. Just note down these figures. Okay. Just note down these figures. These are X and the Y. Now there is a relationship between temperature and the ice cream units. We all know there is a relationship. But what is the intensity? What is the intensity? What is the level of the relation? Strong, weak? This is the calculation determines based on the past data. This is the past analysis. So R is equal to, what was the formula? The formula was that, I think I should write it again for you people. This is n summation of xy minus summation of x summation of y divided by under root, that is n multiplied by summation of x square minus summation of x the whole square, and then you will be multiplying again n multiplied by summation of y square minus summation of y the whole square. Okay, now put up the figures here. I think you people had noted down these figures, and I'm just now going to write the figures. And n is 4 multiplied by, what is summation of xy? This is 3084, 3082. This is the figure 3082, 3082 minus summation of x 76, summation of y 153 divided by under root. N is 4 multiplied by, what was summation of x square? You can see from your noted figure, it was 1608 minus summation of x, that was 76 the whole square, and 4 multiplied by 6041 minus summation of y is 153 the whole square. So when you will be solving, the resulting figure is 0.99. I have already solved this question. I have already solved and noted down. That is why I'm writing in a quick manner. Now 0.99 is something which is partial positive. It is something partial positive. If your R is +1, that is perfect positive. If your R is in between 0 and +1, that is partial positive. If your R is 0, that means no relation. For example, apple and banana, they come. This is the natural production in every season. There is no relationship at all. If your answer is -1, that is perfect negative. And if your answer is in between -1 till 0, it is partial negative. All right. So this is the coefficient of correlation. Students, just comment in the question box. And what I have decided right now in my mind, that today we are not having any break. Is it fine? Because the break will take 15 minutes and we will be covering one topic as well. All of you, I need a quick response from all of you. See, I am not giving the break. That's also for your studies. Is it fine, all of you? Now that's very good. The strong commitment of the students, I always appreciate. And today is Jummah as well, and we have got Jummah prayer, and it is according to Pakistan time. The prayer time will be after 2 as well. So, so students, we are not going to have any break today, and I appreciated your commitment by not having the break. Okay, now this is the coefficient of correlation. Now let's come on to the next slide. That is coefficient of determination. Now see, this is something x, this is something y, x and y. And point to be noted is that there is a change in y. there is a change. There is a change in y. There is a change in y. It's because of x. There is a change in y because of x. We all know. Coefficient of determination is basically shown as r square. Now, what is r square shows? R square shows that percentage change in y because of x. Assume, assume there is x, there is y. We have solved. The r was 0.92. The r was 0.92. Now that was showing partial positive correlation. Okay, but when we will be solving r square coefficient of determination, that means r square 0.92 would become square. That means 0.92 square, 0.92 square, that is 0.8464 multiplied by 100, that is 84.64%. You know what does this indicate? What does this indicate? This shows that there is 84.64% change in y because of x, and remaining. Now what was the 84.64? Now what was the remaining? That is 15 point, and remaining 15.36% because of other factors. Because of other factors, not because of x. Because of x, the change in y is 84%, 84.64%. Because of x, there's a change in y that is 84% only, 84.64%, and rest of the 15.36% because of the other factors. That is not the reason x. 84% change in y. Obviously, there is a change in y that is because of x, that is 84%, and 15% is something else, some other factors. Now this is the coefficient of determination. Now let's come to the next slide. This is the line of best fit. This is a line of best fit. Line of best fit is that it is a line of best fit is the straight line. I'm not drawing any graph, but this is the straight line which is the best fit. This is a straight line which is best fit, and there is an equation, that is y is equal to a plus bx. A plus bx. There's a line which is a plus bx, and this is a straight fit line. Straight line of best fit is the linear regression analysis. Linear regression analysis. Now what is this? A shows the fix, x shows the activity, b shows the variable portion, and y shows the total amount. Y shows the total amount. Now there are separate formulas for. First of all, you need to calculate b. B is calculated as n. N means number of pairs of data, summation of xy minus summation of x summation of y divided by n summation of x square minus summation of x the whole square. And then you will be calculating a. How a will be calculated? is calculated as summation of y upon n minus b summation of x upon n. You need to analyze the past data, and you are constructing a pattern, for your future, analysis. Okay, there is a last slide. The one who wanted to take the screenshot, you can, Hassan. All right. Now this is the line of best fit, and this is your question. Again, we have got 4 pairs, n is 4, and we have to draw the columns x, y, xy, and the x square. I am writing it, and I have already solved because it is a lengthy calculation. It's a time consuming. Basically, it is not difficult as such. So first of all, take the x. That's 20, 17, 24, and 30. It is summation of x. 20, 17, 24, and 30. That is 91. What is y? 80, 85, 91, and 96. That is summation of y. 352. Now what is xy? Write the figures. I am just writing the total. Summation of xy would be 8109. And what is x square? I'm just writing the total answer. That is summation of x square 2165. Either believe me or solve it, up to you. But I recommend just to take the screenshot because we are having limited time, and I wanted to give a recap of maximum area. That is why I'm not even giving the break today, because since it is the last day. So these are the values which we had calculated, and now we are supposed to calculate the b. First of all, we will be calculating b, and what is the question? This is the question, and we will be calculating b first. Now what was the formula of b? This is the formula of b. This is the formula of b. Okay, and this is the formula of a. I'm just putting up the figures. Okay, I am writing the formula again. I'm writing the formula again for b. That is nxy minus summation of x summation of y upon n summation of x square minus summation of x the whole square. And how will you be calculating the b? Just remember these figures. And b is 4 multiplied by 8109 minus 91 multiplied by 352 upon 4 multiplied by 2165 minus 91 the whole square. And b is 1.07. b is 1.07. Next, we are now going to calculate a, and the formula for a was summation of y upon n minus b summation of ex upon n. Now summation of y was 352 upon n4 minus b is 1.07 multiplied by 91 upon 4, and now the a is 63.66. Now y is equal to a plus bx. Y is equal to 63.66 plus 1.07x. Now you have made this a linear equation, and see, this is a total production and total cost. Remember, there was a method, Hilo method, which we had also discussed in the variance class. Hilo method only considers two activities, the highest and the lowest. Now this is the line of best fit which consider all the units available, all the activities available, all the pattern available, the detailed analysis, and that is the thing. Now for the future forecasting, for future forecasting, place x is equal to units to be produced in the future for future cost. Okay, and a is 63.66 fixed cost, and b is 1.07, that is variable cost per unit, and x is my total units, and y is my total cost. Now the basic thing is that Hilo method considers only the highest and the very lowest activity level, but this linear regression analysis analyzes all the data which is being available here, not skipping any of the activity. Okay, let's now move on to the next topic, which is time series analysis. The time series analysis. I am going to give you a recap, a thorough refresher of time series analysis so that you will be able to handle at least the MCQs. So time series analysis is basically, it is, see what is written, the time series. You have to analyze the past serial time. It's a past what? Serial time. It's a past serial time. Serial time. Okay. The time series. And what is the trend? The trend is basically the increase or decrease in the demand. Increase or decrease in the demand normally. And what is seasonal variation? Seasonal variation is basically, it is also the fluctuation in demand. It is also the fluctuation in demand because of season. Because of season. Now, because of any season, the demand is likely to increase extraordinary. For example, when the tourism season is at its peak, then the demand for the hotels, demand for the restaurants are increasing extraordinary. It is not the normal increase or decrease in demand. The normal increase or decrease in demand with the passage of time is the trend, and seasonal variation is something which is the increase or decrease just because of the season, not because of the routine thing, because of the season. So time series analysis basically considers these two aspects. There are other aspects as well, but time series analysis is the technique which analyzes the past serial of time, past serial time, the data in a serial manner, the data in the serial manner, trend, and the seasonal variation. Now see the thing, there are two models, additive and multiplicative model. In the additive model, there is YTS. In the multiplicative model, it is YTS. Now, what is the difference? Is the additive, that means plus. Is the multiplicative, that means multiply. And what is Y? Y is sales units, T is trend, S is seasonal variation. S is seasonal variation. Additive model, which means in a trend, the seasonal variation will be added. In a multiplicative model, the seasonal variation will be multiplied. Now I can convert these two models. I can convert these two models. When it is additive, I can make it multiplicative as well. No problem at all. It's just about the calculative manner, the calculation manner. You people can notice in the next question. Just read the question at your own pace. Requirement: what are the expected sales in quarter two of year three? Hurry up, read it. Then I will be solving this question here. Read this question at your own capacity. ABC Limited has made the trend equation. Now see, when the MCQ will come, that trend equation will be given to you. The trend, in the trend equation, it is a plus sign. It is a plus sign in trend equation. That means it is the rising trend. It is the increasing trend. Okay, it is the increasing trend. And it was based on the past 2 years. The seasonal variations are, these are the seasonal variations. Now see, there is no model name mentioned, but this is +9, +7, -11, -15. This is the additive model. This is the additive model, and the indication is that the quarterly seasonal variation should always be 0. You people can calculate it. 19 plus 7 minus 11 minus 15, that is 0. Quarterly seasonal variation in additive model. Note these things. These are the theoretical discussion points. These are the examinable content. Quarterly seasonal variation in additive model is 0. Okay. So plus sign indicates that trend is the rising trend, and the trend was based on the last 2 years. Now see what I am writing. They had made the past data of 2 years. In 1 year, we all know that there are 4 quarters. See, quarter 1, quarter 2, quarter 3, quarter 4, and year 2, and year 3. See, what they have analyzed: quarter 1, that means 1, that means 2, that means 3, that means 4. There are 4 quarters. That means 5, 6, 7, 8. They have analyzed the data of 2 years. 2 years means 4 and 4, 8 quarters. And in the upcoming year, we have got quarter number 9, 10, 11, and 12. And they are asking me for the quarter 2 of year 3. Now, quarter 2 of year 3 is the 10 figure. So, y is equal to t plus s. So, y is equal to t plus s. Now, what is the t equation? What is the t equation? T is 180 plus 1.2 q. S is quarter 2, 7 plus 7, that is S. Okay, now in Q, I will be placing the value 10 because it is a 10th quarter. So 180 plus 1.2 Q, in Q we are placing 10 and 7 is the seasonal variation. Now the total answer is 180 plus 1.2 multiplied by 10, that becomes 192 plus 7, that is total 199 units. That is the expected, or you can say the forecasted sales units in quarter 2 of year 3. This is just a forecasting. It is not necessarily that that these number of units will be sold. This is my estimation based on the past 2 years. Based on the past 2 years. Based on the past 2 years. All right. So this is the MCQ kind of a question which you may be facing in your CBE exam. Allotting the numbers, it's understood quarter 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and this is being asking for quarter 2 for year 3. Just 10 seconds. Now let's move on to the next slide. The next slide is about, see, the seasonal variations are 1.13, 0.9, 1.1. This is the thing. This is showing the multiplicative model. This is showing the multiplicative model, and in multiplicative model, the total, you can calculate the total should be equal to 4. See, you can add it thing. This should be equal to 4. This is equals 4 in multiplicative model. Now this is yet another indication. Now this is a quarter. These are the quarters. Again, it's the past 2 years. Past 2 years, and we are being asked for quarter 3 for year 3. Quarter 1, quarter 2, quarter 3, and quarter 4. Year 1, year 2, year 3. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and 12. Now we should have 11. That is quarter 3. That's y is equal to t multiplied by s, t 220 plus 1.5 q multiplied by s. That is the quarter 3, 1.1. 220 plus 1.5 q 11 multiplied by 1.1. That is 260.15 units forecasted to be sold in quarter 3 of year 3. Now that is a multiplicative model. The hint is that the total should be equal to 4, and when the total is equal to 4, that is a 0. That is also the theoretical question which can be examined. Now move on to the next slide. These are averages. These are averages. And number 1, arithmetic mean. Okay, there is a request from a student that you want to take the screenshot of line of best fit. Okay, This is the line of best fit. Take the screenshot of this. Chitalu comb. Have you taken the screenshot of this? Okay, this is the next slide. Take the screenshot. Done. And this is another slide. Type yes once you're done. Okay, let's now move on to the averages. See, students, what is average? What is average? Average is something. Average is something. For example, in day one, don't write. In day one, I sold 10 units. In day two, I sold 15 units. Now, total day two, I sold how many units? 10 plus 15 is equal to 25 in 2 days. So, on average, I sold 12.5 units in a day. This is the average. This is the what? This is the average. Now, we usually calculate the averages figure. We usually calculate the average figure, and this is the arithmetic mean average, which I had just calculated. There are different averages. There are different methods to calculate averages. Number one is the arithmetic mean. What is arithmetic mean? It means simple average that you calculate sum of all divided by number of values, For example, day one, for example, day two, for example, day three. Okay, there are three values. Now, whatever the data is it number of units? For example, number of units, number of students in the class. For example, there are 10, 20, and 60. Now, what is the total? What is the total? The total is sum of all will be also known as summation of x. So 10 plus 20 plus 60 upon how many days are there? 1, 2, and 3. This is 3. So 10, 20 plus 60, it is 90. 90 upon 3, 90 upon 3, which means on average there are 3 units in a day. This is on average. What does it mean? It is on average. On average, I had sold 30 units in a day on average. Now, why the average figure is calculated? Just listen it verbally. Average figure you calculate in order to predict the future. That if on average there are 30 units in a day, then in the upcoming months, how many units can be sold? You will have to multiply with the respective time period. This is something which is a simple average. Now, my tone is a little bit slow because it is a recently added topic in paper MA. Recently means it's more than a year. So, but this is also examinable. Arithmetic mean. Arithmetic mean is a simple average, and you calculate the average for the future forecasting because we are understanding the forecasting. Okay, let's now move on to the this heading. What is this heading? This is the complex mean, arithmetic mean. See what is written? It is written the complex. Now, what do you mean by the term arith? That was a simple mean. That was a simple average, simple mean average. Now, what is this arithmetic mean? Complex. Because it is complex, so my tone is slow. In a complex mean, you will be calculating average. You will be calculating what? Average. Okay. You will be calculating average in a frequency distribution. Now, what do you mean by the term frequency distribution? See the English word frequency distribution. That means you have to distribute something. You have to distribute something. The thing which you are distributing, the thing which you are distributing is X. For example, you have got sweets. There is a box of sweets. There's a box of chocolates, and you are distributing to the people. That means group data. Which data? Group data. Now, you are distributing a chocolate to people. So chocolate is the subject matter. Chocolate is a subject matter. Chocolate is what? It is a subject matter. I'm giving you a very sweet example. Chocolate. Now you are distributing to the people, the group data, the group of people. Now that on which X is distributing, X is distributing something on something which is known as F. F is a frequency distribution group data. So something which you are distributing, the main subject matter will be shown as X, and the X is distributing on something which is X upon F. X upon F. Okay, X upon F. For example, cost per unit. So cost is X, units is F. Okay. For example, number two example. Number next example is like, for example, uh, I I will be using this students number of days, students absent. So that's students absent on per day. So main subject matter is not the day. The subject matter which is visible to me, that is in front of me, chocolates, the students. This is X, this is F. Okay. So how will you decide something X or F? Just see the question in a very simple language. I am not using the statistical hard jargons. I am explaining in a simple language. That is what my habit is, to explain in a very simple language. Some data, something which is being distributed will be shown as X, and X is distributing over something, that is F. Okay, so it is very important thing to remember and noting. Now I am now going on to the next slide. Now see, this is saying students absent and number of days. I am writing two things: days per student. Days per student does not make sense. It does not make sense. What does make sense? Students per day. That makes sense, which means students are X and number of days are F. Now calculate the arithmetic mean. Whenever you are having a complex arithmetic mean, then you are calculating summation of Fx upon summation of F. Now how? See here. X and F. And we will have to take Fx as well. 1, 2, 3, 4. X is 1, 4, 6, and 3. The total is summation of x. I don't need it. What is f? F is 6, 12, 5 and 2. The total would become summation of f, that is 25. Now see, what is the interpretation of this thing? Interpretation of this line. Number one, this line. What does this indicate? That in 6 days, one student was absent. In 6 days, one student was absent. Just understand my words, catch my words. In 6 days, one student was absent. So that means six. That means six. Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. There are 6 days, and one student was absent in every class. Sometimes Mr. A, sometimes Mr. B. Forget that. Now next, in 12 days, four students were absent. So that means a total 45, 48, and here total 30, and here total 6. Now that is summation of fx. That is total 6, 48, 30 and 6, 90. Now, what is the complex mean? Summation of fx upon summation of f. That is 90 over 25. The answer would be 3.6. You know what does this indicate? This indicate on average 3.6 students were absent. 3.6 students were absent per day. That means on average 3.6 students were absent in a day. So this is the interpretation of the complex calculation. Why? Because it is a frequency distribution. This is a group data. This is not a single data. This is a group data, because many of the students and many of the days, you are not calculating on a specific days. You are calculating for the whole days, and see that there are 25 days. You are making a data for 25 days. 25 days are being grouped into different categories based on the students absent. So that is a frequency distribution. One, four, six. Oh, all right, all right. Students, sorry, that was I think a calculation error. 1 4. Thank you so much for noticing. What's your name? I should thank you with your name. Aisha, thank you. Okay. Now see, this is 1 4 6 and 6. So 6 twos are 12. Sorry, that was a calculation error. 6 twos are 12. So now that was 6 12 plus 5 plus 2. That's 25. 6 48 30 and 12. That is 96 now. That is 96 now. Making a mistake ensures that I am not a robot as well. 96 over 25, that is 3.84. Student, just correct the figures. I mistakenly wrote the wrong figure. That is 3.84. But the concept is the essential thing to memorize. That is 3.84 students were absent on per day on average. This is a complex calculation. Let's now move on to the next question, that is a median. Now, what is a median? What is a median? Median is something, sorry, median is something which is a mid value, which is a mid value. For example, okay, this is any value. Okay, this is any value, like complaints, like number of students absent, like the cost, any value. I am saying it any value, any value. The value was 10, 13, 9, 7 and 5. Now these are the values which are not arranged. These are the value which are not arranged. What you are supposed to do, first you should arrange. First you should arrange in a sequential order, in a sequential order. All right, ascending order. In an ascending order. That is number 7, then number 9, then number 10, then number 13, and then number 15. Now, which one is the middle value? It's 10. So that is known as the median average. That is known as the median average. You should need to arrange the data first in an ascending order, not the descending order, in an ascending order, and then find out the middle value. That is known as the median average. Now, let's move on to the next slide, that is the mode average. And what is mode average? It is also the mode average. For example, mode average is that value. Mode is that value that occurs most often. That occurs most often. Most often means most of the time. Most of the time. I am giving you the example. Assume that you are having your you are selling cell phone. I am writing example that we are selling mobile phone. We are selling mobiles, okay? And we received complaints. And we received complaints. Now, what are the complaints we had received? There was a Wi-Fi issue. There was a Wi-Fi issue 3 times, which means 3 complaints. How many complaints I received for the Wi-Fi issue from 3 customers? Now, I received the signal issue, signal that my mobile phone is not catching the signals, and that was 7 times, which means 7 complaints. Now, another complaint I received, that was the battery issue. That is, for example, 2 times. That means 2 complaints. Which complaint I had received repeatedly? Can you people write here? The signal issue. Now the signal issue. So that means that is the mode value. That means that is the mode value. This is a mode. This is the mode average. This is a mode average. Okay, this is the mode average. Now I should write another example. That is example number 2. That was example number 1. Example number 2 is that, for example, there are complaints and there are number of weeks. 0 complaint, 1 complaint, 4 complaint. That is number of weeks, that is 5 weeks. That is 12 weeks. And that is 1 week. Sorry, it is 1 time. These are not the weeks, these are the time, number of weeks in a week. Five times. Can you people tell me the mode value here? Can you people tell me the mode value here? In the second example, what is the mode value? Some people might be taking the 4. That is wrong. No. You have to see the times. There is a 12 times. That particular one complaint I have received 12 times. Particular one complaint I have received 12 times. So here mode value is 1. That particular one complaint I had received 12 times. You have to see the times. You have to see the times the particular complaint is being received, that the particular issue is being highlighted, the particular value is being repeated. That one, uh, you can see that here. If you people, if anyone of you is confused related to this, see, 4 complaints received one time. That means total 4, and that is total 12. 12 times I have received the same complaint. So that is a mode value. Mode value is that which is repeatedly observed. That is the mode average. Okay, let's now move on to the next slide, that is the expected value. Now, what do you mean by the term expected values? See, expected values, this is also the average value. This is also the average value, but it does consider the probabilities of all the possible outcomes. For example, I am writing an example that there is a project, and I am expecting $10,000 profit or $15,000 profit. All right. So one would be calculating the average like that way: 10 plus 15 upon 2. 10,000 plus 15,000 upon 2, that is $12,500. You know what is this figure? This is the simple average. This is the simple average. We are not going to understand this thing. Here, EV, expected value. This is also average, but with respect to the probabilities. Now, what are the probabilities, sir? Project. I am expecting profit 10,000. I am expecting profit 15,000, and my past experience shows that there are 80% chances for this and there are 20% chances for this. Now I need to calculate the average based on the weightage. I need to calculate the average. EV, expected value, is equal to summation of PX. How will you calculate that? So simple. What is P? P means probability, X means the subject matter. X is the subject matter. Now, what are the probability? Number one, that is 80% chances I will be receiving 10,000. That would be 8,000. And 20% chances I would be receiving 15,000. Now, that is 3,000. Okay. 15,000 multiplied by 20%, that is 3,000. So 8 plus 3, 8 plus 3, 11,000 is my EV, expected value. Now these are my expected values based on the expectation of the probabilities. Based on the expectation of the probabilities. In a simple average, the probabilities are not being considered, but in EVs, the probabilities are being considered. All right. So expected values are basically when we can allot when we can allot probabilities to different situations, and probabilities come from past experience. And probabilities comes from the past experience. I'm not saying these probabilities, my experience is saying these probabilities from the past experience. All right. So again, I am highlighting that thing. My past experience is saying these probabilities. Once again, my past experience is saying me these probabilities. I am not saying that. So that is the expected values. Let's now move on to the question of expected values. And this is the last question. And what I had planned for the webinar, Alhamdulillah, we have completed all the aspects. And there is one just question, and you are required to calculate the expected values. You might be confusing that, Sir Haris, where are probabilities? And Sir Haris is saying that probabilities are in the question. We have to spot it. Where are the probabilities? See, find out X and Y. Can you people tell me what is X here? Can you people tell me what is X here? Number of units or days? Just answer the question. What is X? Come on, students, what is X? Yes, number of units. Number of units are X. C. Number of units are X. And these are number of days. That is the frequency, F. And here you need to calculate the probabilities. Now, how many days are there? How many days are there? 40, 60, 80, and 20. There are how many days? Make it total. The total number of days are 40 plus 60 plus 80 plus 20. The total days are 40, 60, 80, 20. 200 days. How many days? 200 days. And you need to calculate the probability for each and every frequency distribution. Now, C number 1. 40 upon 200 multiplied by 100. C number 2. 60 upon 200 multiplied by 100. C number 3. 80 upon 200 multiplied by 100. C number 4. 20 upon 200 multiplied by 100. Now, here are probabilities. Here are probabilities, and that becomes 20%, 60 upon 200 becomes 30%, 40%, and 10. And there is total 100%. All right. So we will be calculating expected values, that is summation of px. Now, summation of px, this is p and this is x. What is p? P is 20%, 30% probability. P means probability. 20%, 30%, 40%, and 10%. And what are x? The x are units: 100 daily, 200, 300, and 400. And you will be calculating px and then make it sum. Make it sum. Summation of px. EV is equal to summation of px, and the amounts are 20, 60, 120, and 40. The total are 240 units. And how will you interpret this thing? How will you interpret this thing? What is the description? That is on average 240 units per day. 240 units per day. That is 240 units per day. This is the interpretation of this thing. Students, I would like to say one thing to all of you. I would like to say one thing to all of you, that be confident. Be confident for your paper. Number one thing. Number two is that if any one of you is not on the WhatsApp group, if any one of you is not on the WhatsApp group, you people can freely WhatsApp me at my this number +92 333 311 3959. Okay, you people can WhatsApp me. If you are not on the WhatsApp group, I can add you over there. And this is day 5, and this was the last this is the last day, and I had tried my level best to cover the entire content which I had already discussed, the entire content which I had already discussed. And this was my I can show you, this was my lecture plan. Student, this was my lecture plan. We had covered standard costing, budgeting, performance measurement, and these includes approximately 30% of your course plus some MCQs worth 10 to 20%. Okay, so 60% your exam contents are covered. Then costing techniques, data analysis, statistical, and including forecasting. Whatever the day plan, the plan which I had made, Alhamdulillah, we had covered that thing. And this was the last example of this webinar. I hope that this webinar had given you some benefits. I need a feedback. I need a feedback on your experience for this webinar. Come on, do type something. Is it beneficial? Was it productive? Obviously, I cannot say it 100%, but whatever the contents we had discussed, it was a productive session, what I believe so. But you people as a student can better tell me, can better leave your feedback. Okay, thank you so much for your valued feedback. Mushed, Hanif, Sabah, Bilal, Habib, Daniel, Siti, Zuleka, Raniman, thank you so much. Daniel, Habib, Anis, thank you so much for your valued feedback. And this, according to me, I tried my level best to cover the areas which I could cover within this specified time period of 5 days. That is 15 hours. Now all the recorded sessions are available at vimeo.com/ACCA Pakistan. You people can freely access to the recorded sessions if you want to revise that thing. And my WhatsApp number are here right at the bottom of the screen, +92 333 311 3959. And you can also notice that thing. You can also notice here, this is my WhatsApp number once again. And I really wish you people good luck for your exams. Be confident and try to solve each and every question of your official exam kit. Okay, so I really wish you people good luck for your exams. Good luck. Take care of yourself. Allah Hafiz. Bye bye.